Have you ever made an investing mistake so bad that you cringe just remembering it? I made a huge investing mistake in Nike back in September, and I wanted to talk about it here so you could learn from it. I've been an investor in Nike since February 14th of 2012, where I first opened my position at $26.71. Nike ended up rocketing to an all-time high in 2021 of $179.10, more than 570% higher than where I bought my position. Plus, I was reinvesting the dividends that Nike paid out the entire time. So my position grew over those 10 years. Since I sell in stages on the way up, my Nike position had already had all the original capital taken out of it by August of 2018. What this means is that I no longer had any money at risk. The Nike position that I had built over the 6.5 years that I held it was entirely made up of profits, with none of the original investment capital left in it. By the time Nike had reached its all-time high in 2021, I had sold even more on the way up, so I had plenty of profits to start putting back into Nike when it rolled over. This strategy, which I call buying in stages and selling in stages, is critical to my investing success. I'm a long-term investor, so I never sell a position entirely unless it breaks my investing thesis. In other words, as long as I still have faith in that investment for the long term, I don't ever want to sell it. I believe it's going to go higher. However, at the same time, when a stock reaches a high and sees a lot of resistance, I don't want to just lose all of those profits when it rolls over and sells off. So what I do instead is sell small amounts of that position as it reaches new all-time highs, and then take those profits and put them back to work if the stock sells off. Since Nike and the rest of the market sold off in 2022, I was adding back into my Nike position, only using the profits as it sold off, buying more shares as it reached key levels of support. This worked out great. In fact, my lowest buy was on September 30th of 2022 at $83.72, just $1.50 off of its low at $82.22 where Nike bottomed. When Nike bounced and rallied really hard from September into the beginning of 2023, it was time for me to start taking profits again. And I did so on January 9th of 2023. Selling some of my shares at $126.46, nearly a 30% gain from where I bought them at its low in September of 2022. As it has for decades, my buying and selling in stages strategy was working great. So what was my huge mistake? Whenever I take profits, I also determine where my next buying target is. In other words, when I sell, I'll pick the next place where I'm going to add money back in so that I know in advance that I've done the work. When I took profits in January, I said that my next buy target was going to be $83.30, which was slightly above that low of $82.22 Nike had seen in 2022. When Nike held up really well throughout 2023, I ended up raising that price target to $89.62, which is a point of support Nike has seen many times in the past. So here's where I made my mistake. As Nike was selling off in September of 2023, it kept getting lower and lower, and it was starting to approach when it needed to report earnings. Many bears in the space were saying that Nike would surely disappoint, that China's demand for its products had dropped so low that Nike would disappoint on earnings. Normally, I never listen to so-called experts. In my experience, there are no experts. When it comes to an outstanding company like Nike that I believe in for the long term, I would rather buy, have it disappoint, sell off, and then buy more at a lower level because I have confidence that Nike would come back over time. So what was my mistake? 2 days before Nike was going to report earnings, I canceled my buy order because I thought the bears might be right and that Nike might sell off to a lower low after disappointing on earnings. A day after I canceled the buy order, Nike would have triggered it, which would have replaced those shares that I sold in January at more than a 30% discount. And then Nike reported earnings and they surprised everyone. The stock ended up gapping open the next day and never looked back. So what's the lesson to all of this? Investing is very personal. It is absolutely critical for every investor to figure out what strategy works best for them and then follow it. The instant you let your emotions get the better of you, like I did, you will make a mistake. Sometimes that mistake will be buying too much. Sometimes it'll be selling too early. For me, my mistake led to the scenario I hate the most when I make a mistake, and that's missing a buying opportunity. Want to learn more? Check out all the videos that I have on my channel. Follow me on X at GetErked. Visit my website, getirked.com, or my Substack, getirked.substack.com. If you liked my video, please hit like and subscribe. It really does help the channel out. Thank you for watching, and I'll see you in the next video.